Well, it's been a long time coming, but the Australian conglomerate CSR has finally sold its sugar division. The Singapore agribusiness giant Wilmar trumped China's Bright Food Group with an offer of nearly $2 billion. The deal comes after CSR won an appeal to allow the demerger of its sugar operations, despite concerns over asbestos compensation liabilities. John Thompson reports.
It's a big day for CSR. After all, the colonial sugar refining company began in Sydney in 1855, refining imported raw sugar.
You do a straw poll around Australia and virtually everyone's heard of CSR, and Colonial Sugar Refineries has been part of the group for 155 years. So it's momentous in terms of, it's the beginning of the end for that association.
CSR will soon be just a building products business. Its sugar division, now known as Sucrogen, will be sold off to the Singaporean agribusiness Wilmar. The negotiations were conducted in such secrecy that the news came as a complete surprise.
I think, you always get a vague sense of disappointment when you think you're in the loop and you find you aren't. But then again, the whole market's a bit like that at the moment. I've had analysts call me today and they had no more idea what was going on than I did. So at least I was in good company.
As late as this morning, experts were anticipating that any sale agreement would be with the Chinese state-owned company Bright Foods. The Shanghai-based firm went public with its interest in Sucrogen at the beginning of the year, finally coming up with an offer below the $1.75 billion, which has now been accepted from Wilmar.
We made it clear that we were giving Bright Foods every opportunity to complete due diligence and convert its indicative price into a final offer that was capable of acceptance. But at the end of the day, the offer from Wilmar was superior both in terms of price and conditions, so that's what swayed the board's decision.
I think if I was a CSR shareholder, I'd be quite pleased today.
And so they were, with CSR shares jumping about 3.5%.
But generally, I think the mood in the market is that sugar prices have probably come off their recent highs. So yeah, I think $1.75 billion, given the current conditions that the offer stipulates as well, are not as erroneous as the previous deal that we saw with Bright Foods. And I'd say that that's a good price, and probably, most people would suggest that it's a small premium as well.
Wilmar is one of the biggest companies on Singapore's stock exchange. It's promised to pursue growth strategies in Indonesia and other high-potential Asian markets. But it's been a long and tortuous process getting to this point. CSR had looked at demerging its sugar business. The plans were put on hold by the global financial crisis, then blocked by the federal court, concerned in part that CSR would be unable to meet its asbestos liabilities. That should now be a whole lot easier.
Well, our starting point is, of course, we'll end up with, approximately $1.6 billion worth of cash in our balance sheet. So, in that sense, you could say that CSR is in a better position to protect shareholders. But going forward, we'll certainly take the victims' interests into account in considering our capital management options.
But the deal is not yet done. It's still to be approved by the Australian and New Zealand foreign investment review bodies.
I don't necessarily see this being too much of a hassle, and I think the market as well hasn't seen any kind of really huge hurdles.
CSR is certainly hoping that's the case.
For many people at CSR, it's been the end of a long journey, but I think the board, management and shareholders will be very happy with today's announcement.
Just how happy will become clearer on Thursday, when the company holds its annual general meeting.